Ladies and gentlemen, welcome to the Orient Limited Q4 and FY'25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Suyash Samant from Stellar IR Advisors. Thank you, and over to you, sir.
Thank you. Good evening, everyone, and thank you for joining us today. We have with us today the senior management team of Orient Limited, Mr. Aditya Gupta, Chief Executive Officer, and Mr. Himanshu Jindal, Chief Financial Officer, who will represent Orient Limited on the call. The management will be sharing the key operating and financial highlights for the quarter and full year ended March 31, 2025, followed by a question and answer session. Please note, this call may contain some of the forward-looking statements which are completely based upon the company beliefs, opinions, and expectations as of today. These statements are not a guarantee of the company's future performance and involve unforeseen risks and uncertainties. The company also undertakes no obligation to update any forward-looking statement that reflect developments that occur after a statement is made. I now hand over the conference to Mr. Aditya Gupta. Thank you, and over to you, sir.
Hi, good evening, everybody. Welcome to our Quarter 4 and 12-month FY'25 earnings call. Fiscal year 25 presented a challenging operating environment for OVL. Domestic demand for tiles remained subdued, and exports continued to be affected by the volatility of ocean freights. These external factors, coupled with overcapacity in the industry, especially from Morbi, increased pressure on pricing and volume, heightened competition, resulted in an industry-wide drop in average selling prices. For the full year, OVL registered net sales of 666 crores in FY'25 compared to 669 crores in FY'24, a drop of 0.4%. Consolidated EBITDA for FY'25 was 30.8 crores, while profit after tax was 2.8 crores. Despite these difficult conditions, we had wins on cost-saving initiatives and cost-based improvement. The go-live of our solar power purchase agreement at Sikandrabad helped lower power costs. By streamlining processes and improving existing systems, operational efficiency was enhanced, helping us to prune the overall cost of operation. While a significant portion of these savings was passed on to the market to maintain competitiveness, OVL successfully retained a part contributing to our gross margins. Our gross margins for FY'25 were 35% versus 33.6% in FY'24. Our key strategic focus during the year was pivoting to strengthen our retail business. OVL emphasized selling more premium products, especially glazed vitrified tile and slabs. The salience of GVT grew to 41% in FY'25 and the vitrified mix improved to the highest ever 58.5%. This strategic shift towards premiumization was supported by investment in brand and sales team structure. We continued investing in marketing activities. Our All India TV campaign launched in the previous year continued through FY'25. This unique communication built on our vision of making tile shopping easier and positioning OVL as a solution provider by focusing on website-based price discovery, visualization tools, and a wide product range. This approach to building brand differentiation continues to win external recognition, as OVL was awarded Brand of the Year, Flooring Idea for Tiles for the 5th consecutive year by Realty Plus and Marketing Campaign of the Year. We strongly believe that a differentiated brand will make sustaining brand awareness more cost-effective. To support the shift towards GVT and expand our reach, particularly in the South and West markets, the Dora GVT line, having 3.3 million square meter, had come into existence in FY'24 and has enabled growth. These capacity additions are part of the total 234 crores invested in capex between FY'19 and FY'25, adding 10.9 million square meter of additional capacity largely funded through internal accruals. With this capacity in place, the focus has shifted to expanding distribution and brand building. Despite the external operating environment, OVL's unique strength and positioning are reflected in its credit ratings. India Rating has retained its A1 rating for us, and CRISIL has reaffirmed its rating as A, albeit with a negative outlook. OVL has also consolidated its banking relationships and resumed banking once again with State Bank of India, a sign of the company's creditworthiness. Standard Chartered Bank, ICICI Bank and Axis Bank continue to be our other lenders. While FY'25 was challenging, we have continued to make significant investments in our strategic objectives, enhancing the premium product mix, enhancing our reach to new kind boutiques, and building brand awareness through targeted marketing campaigns. We believe these investments will position us strongly to capitalize on the expected pickup in demand as real estate cycle turns for the better, particularly since tiles are one of the large products used in the cycle. OVL remains committed to aggressively investing in sales and marketing activities to drive volume growth in the coming years. With this, I would like to open the floor to Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Moksh Ranka from Orient Capital. Please go ahead.
Hello, sir. In your opening remarks, you mentioned that FY'25 was a challenging year, especially because of overcapacity in Morbi. So, do you anticipate more organized opening capacity and since line prices has risen up to so there should be a deterrent for new capacity to be set up. Or are you seeing any shutdowns there? Because average selling price has also dropped, as you mentioned.
Moksh, your line is not clear, Moksh. I did not understand your question. Can you please repeat?
I just want to understand, are more players opening up capacity in Morbi or are there any shutdowns? Because the average selling price has also dropped and line prices has also increased.
So, Moksh, the data which comes out, I think, says about the Morbi Association are saying about 550 to 600 odd companies in Morbi, units in Morbi were operating, somewhere in that range. We expect, I think Morbi would have been at about 60% odd capacity utilization is our estimate last year, maybe even lower. And however, there is more capacity which is going to come on line in Morbi in H1 in spite of the sluggishness in the market. So we expect this capacity overhang to continue till the markets turn for the better.
Okay, and since the freight rates have dropped and FY'25 was not a good year for exports, especially for the tile industry. So do you anticipate FY'26 to be a good year because of lower freight rates and any other things which would aid exports?
So Moksh, we are not big players in exports. But the freight issue which impacted exports last year seems to be behind us. There are periodic spikes in freight this thing, but I think by and large it's settling down. As we speak today, this quarter there has been a spike in freight rates because Chinese manufacturers across industries are really booking space and all to dump their stuff in US market before the 90-day tariff relaxation period gets over. So there is a lot of uncertainty, a lot of volatility. Every month comes with some big news, some new news. But I think structurally the freight rates definitely will be subdued for this full year compared to what they were earlier. So that's one positive factor. On the other side, how these anti-dumping duties in the US will work out, tariffs in the US will work out, and how growth in Europe, US and all will play out this year is anybody's guess, and that would have could have an effect on building and construction activity in these markets. So I think it's a wait and watch kind of a scenario. Situation will progressively get clarified as time passes.
Okay, and I was seeing our sales mix. Now currently 100% of our sales is from vitrified and GVT side, but we are not seeing any major margin improvement. So when do you anticipate margins to increase?
So we do 59% from GVT and vitrified. Vitrified is 59% for us, 41% is ceramic. So we are not 100% vitrified books.
Yes. So 59% has been the highest ever which we ever had. So why is not that an uptick in margin?
Moksha, your line is very unclear. We are missing out half the words which you speak. So maybe if you can get to a better location.
Are you able to hear me? Hello? Is this better?
No, it is not.
Okay, I'll get back in the queue. You can go forward with other.
Thank you. Next question is from the line of Rohan Choksi from RAAS Capital. Please go ahead.
Yes, sir. Thank you for the opportunity and your information. So my question was, in spite of GVT sales going up and now that all the capex is done as well, when can we see the operating leverage kick in?
So I agree with you, Rohan. So we have, the one big capex cycle for us, as I mentioned, is now over largely through internal accruals. Unfortunately, the markets have been very subdued. If you see the last 3 financial years, FY'23, 24, 25, the listed players have been in the 11, total listed players have been in the 11 to 11,500 crore kind of top line figure. Hasn't changed for 3 years now. So our capacity is in place. Our operating margins, as I mentioned, are getting better through cost efficiencies. But the operating leverage a lot depends on a bit of upsurge in the market. Capacity has been built up in FY'22, 23 and 24, expecting the markets to be better, not only by us but by the industry. And that is really pulling down everybody. The steep erosion in average selling prices. So a lot of the vitrification benefits for Orient have been sacrificed because of higher discounts. To your question of when the cycle will turn, I think step by step things would get better. One piece of the puzzle is definitely exports. A small 10-15% uptick in exports will really give a fillip to domestic players like us.
Yes, sir, got it. And I've also been following the housing market, so the commentary is similar that the next 2-3 years, they do expect that to pick up as well. So thank you for your answer. And if I'm permitted, can I also please check how's the correlation between the advertising expenses reflecting on the sales?
So, this is Rohan, a tough question. I think 100 years back, the founder of Unilever said that 50% of the advertising is a waste, he just doesn't know which 50% is a waste. So I think we haven't really progressed too much beyond it. But what we are seeing is that we started on a TV journey. We have been doing digital for about 5 years now. And we started TV in a big way in December 2023. So let me break this up in two parts. On digital, we are consistently, our website sees about 2.5 to 3 lakh visitors every month, which places us in the top 2 in the industry. So our digital marketing investments have clearly given us benefits and giving traffic on our website. That's one. On the TV side, I think our brand awareness, and we just completed a study, we do it annually in March, April, which is brand awareness track, which we run across some 9 cities in the country. So there has been a slight improvement over March, April 24 versus March, April 25. And given the fact that our TV advertisements FY'25 were not as heavy as in FY'24, this means that our marketing strategy and the choice of media vehicles is working for us.
Sorry to interrupt you. We're not able to hear you.
No, I stopped talking. I finished with my answer to one.
Understood, sir.
Okay, sir. Got it. And sorry, sir, just quickly, I noticed the finance costs for 2025 have doubled from 24. But was there any new short-term borrowing taken or any specific reason for the finance cost to double?
So Rohan, we had one is the new plant of Dora, which was capitalized in September 23. So that depreciation has come and hit us. On finance cost specifically, we took the loan for that thing, which has been the interest of that has been a part of it. Because if you remember, in FY'22 and FY'23, we were largely debt free. And we took up a term loan to finance the Dora line. The interest cost of that has started coming in FY'25, while in FY'24 there was no such cost.
Got it, sir. Thank you so much.
Thank you.
Thank you. Next question is from the line of Ashwath from Arihant Capital. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. Sir, I wanted to know our current ASP, and on one of our previous calls, I read there were some plans to inch it closer to the market leader. Any color on the same? Could you quantify it for us?
So Ashwath, there has been can you hear me, Ashwath?
Yeah, I can hear you.
Yeah. Okay. So Ashwath, there has been an improvement. As I talked about, we are now 59% vitrified. So there has been an improvement, and compared to, I don't want to get into numbers, but compared to say FY'23 versus FY'25, we have closed our gap with the market leader, I would say, by about say for every 10 rupee gap, if it was there in 23, we are now at about 7 rupees gap now. So we have closed our gap with what it was in FY'23. And it's been a steady thing. We have been doing that, in FY'24 was better versus FY'23, and FY'25 is better versus FY'24.
So do we continue planning on the same? Do we continue inching in closer? Or given price issues, price wars, do we plan on maintaining these numbers?
So Ashwath, it's like kind of you asked me very specifically about gap per se. Now, I don't want to take a punt on how the market leaders' strategy will play out in this financial year and what exactly would be their priorities. But I think even with extra trade discounting and all, we are confident that this premiumization is something which would continue for us in FY'26 as well. So that should do better for our ASPs.
Got it, sir. And sir, also could you help with the utilization levels of our vitrified and ceramic plants, if you could bifurcate them, and could you tell me how was the improvement of the same?
So Ashwath, we don't have those figures because all our three locations, in two out of our three locations, we manufacture both vitrified and ceramics. So there is a lot of fixed cost which is just allocated, basis production volume. So we would have, we do maintain location-wise profitability, but it's not possible to have profitability separately for vitrified versus this thing.
Got it.
So this is not the location issue more than anything else.
Okay, understood. So something on lines with what happened in the Tura plant, do we have any other plans to do a similar modification to any of our plants to cater to the growing vitrified segment? I mean, this question could also be aligned with what are our capex plans for the future.
Okay. So Ashwath, see, today we have built up significant, capacity. I think last 4 years or so, we have added about 10 million plus square meters. Our JV has also added capacity on GVT. So we have, more than enough capacity today. So we don't foresee any capacity addition in the current financial year, which is FY'26. We would wait for the markets to kind of turn a bit and get our capacity utilization to about 80-85% before we get onto the next capex cycle.
All right, sir.
To answer your question specifically on capex, this year's capex would be more in line with regulatory and maintenance capex rather than growth capex.
I couldn't get that, sir, again.
I said FY'26 capex would be more on growth and regulatory, more on maintenance and regulatory and not on growth capex. So no new line being thought of in this financial year.
Okay, and what would be that amount for the regulatory capex? Any around the same estimated?
So we are working it out. Wouldn't be very large. 5-10 crores regulatory plus some repairs, maintenance, kind of stuff.
Understood. And correct me if I'm wrong, sir. On a previous call, there was some. I could be wrong on this one on 1,000 CR top line. When do we see this being a realistic number given the market conditions and everything?
So you are asking when we will hit 1,000 crore in the top line?
I'm sorry?
Is that the question, Ashwat?
Yes.
So Ashwat, we have kind of stayed away from giving any volume and forward-looking volume and revenue projections, so I will stick to this. I think the more relevant question is that when do we see the upturn in industry volumes and industry revenues? So I think that is something which would determine the speed at which we hit our 1,000 crores.
Right, sir. Got it. Sir, I wanted to understand what is currently happening on the ground in Morbi. I mean, given there is more news on the Red Sea area conflict, and there are some estimates of freight rates going up. So what happens next in that case? Do we see this continual a domestic dumping of domestic players into the Indian market, or what do you think about the same?
So historically, Ashwath, whenever exports have not done well, that capacity has been diverted into the domestic market on a variable cost kind of pricing and all. There is, as I said, a lot of volatility in the export market. Nobody knows how it will turn out. As we speak, the freight rate index seems to be much higher than what it was a couple of months back. So let's see. There is US in the past few years had emerged as a very big market for Indian tiles, and nobody knows how the tariff will play out in the US and how the economy will play out in the US, Europe, and all. So we'll have to wait and watch, I think. But one thing I would say is that our sense is that Moldy also is hurting. So last 2-3 years, it's not that Moldy is sitting on a lot of cushion that it can keep on discounting. Actually, in the last 1 month, there have been multiple meetings in all the ceramic associations, the GVT association, that's it, double charge association, whatever, multiple meetings. They have gone there, they have all the producers there have taken oaths. We are going to increase our price by 2 rupees per square feet. मतलब इसकी कसम खाते हैं, उसकी कसम खाते हैं, ये करते हैं, वो करते हैं. Lot of those videos have been circulated to the trade कि price हमारा बढ़ रहा है, ये है, वो है. But nothing has really materialized. They are still not having an effect. But after 1.5-2 years, at least I see an attempt there that they are getting together and talking about this. It means that they are also hurting quite badly.
Understood, sir. And one last question before I get back to the queue. I wanted to understand how is the inventory status on the dealer's end? Are we seeing any traction there? Are we seeing repeat orders? Or what is it like? Could you share some color on it?
So Ashwath, when dealers are downstocking, dealers have been downstocking for some time, and they are reluctant to keep stocks because of the falling prices and all. So inventory levels at dealer points are kind of low, and that is why it's so important that if export starts up and the capacity starts getting diverted there, it will stabilize prices, and immediately there will be a positive impact on everybody's volumes.
All right, sir. Okay, I'll get back to the queue. Thank you so much, sir.
Thank you. Next question is from the line of Apurva Anil Sharma from RAAS Capital Research Analysis. Before that, a reminder to all participants, you may press star and 1 to ask questions. Please go ahead with the question.
Yeah. Good evening, sir. Thank you for giving me the opportunity, and congratulations for posting good results in such a industry when the whole thing is going in doldrums. My questions, am I audible?
Yes, sir.
Yeah. My questions will be more on strategic side, sir. In the real estate cycle, tiles come towards the end of any project. Since 15, 16, 17 was a good cycle, then we had a 18, 19 as a dull cycle, 20, and then 21, 22, 23 we had a fairly okay cycle, and then 24, 25 we are seeing a dull cycle. Is this the right assumption to take forward that from 26 onwards we could have a good traction in the tile industry overall?
So Apurva, yes, I agree with you. It's a cyclical industry, and we see this. We have 2-3 bad years, and then a couple of good years, and then again bad years. Because what has happened is that our capacity in the good years and a lot of capacity gets planned, and it's just so. We also expect FY'26 to be better. The Indian economy so far has been quite resilient to shocks from abroad. And with the crude prices being lower than before, that's a huge positive for India. And if we are able to just navigate this tile export piece.
Sorry to interrupt, sir. Can you please adjust your mic?
Am I audible now?
Yes.
Yes.
Is it better? Okay. So what I was saying is that if this tile export piece of the jigsaw puzzle from India is sorted out and we see some traction there, it will be a great year for the tile industry in India. So my assumption, my reading, Apurva, is that more than the real estate industry in the country, it is the diversion of export capacity into the domestic market which is hurting us.
Okay. So see, right now we have positioned ourselves in such a way where the capex is completely done. We have spent on advertisement and branding better than the market leaders. We are ready in all the fronts. We are just waiting for the growth to come in, and we will see the results. But as in, for example, recently Nitco got 100 crore order from Prestige real estate builders. So are we also pouring into directly getting orders from these big real estate people?
So Apurva, we have separate sales teams which are chasing large deals. As a matter of policy, we don't announce these deals because in our industry it is so easy for the exit barrier for a builder who gives you a big order is not very high. So we stay away from that. This has been, we built up this scale about 5-6 years back, and we supply to almost everybody in the country. We supply to DLF, we supply to Godrej. Talking of private builders, we supply to Tata, we supply to Shapoorji Pallonji, L&T Construction, you name it. And you're talking Bangalore, we supply to Shobha, we supply to Puravankara, we supply to Prestige, I'm not so sure, so I don't know. But we supply to almost every big builder here in the country. We just keep a bit quiet about that and don't announce deals.
All right. Sir, one last question. Lately, we have had 2 resignations on the top level. One of Mr. Himanshu Jindal, and before that, we had some chief salesperson had resigned. Is this something that we should be worried about?
No, not really. I think Himanshu is right here on the call, so maybe I'll ask Himanshu himself to answer this question.
So hi guys, Himanshu this side. See, I'm, whatever is happening on my side is a very different story. So I don't think anyone should correlate with me going versus how OBL is doing. So OBL is a very, very strong company. This is how we have built it up. Over the last 6.5 years, I think the legacies which were already there, we have built in more strength. Maybe the disappointment has only been scale, and you guys already know it. The markets have been tough, and our guys are doing what they can in these challenging times. So I think leave attrition or voluntary attrition out of the equation. These are personal choices. I think very honestly, 6.5 is not what I intended to be. I think I mentioned it on our board meeting today as well. But these professional bonds and the personal bonds that I've created here in OBL, are lifelong. So I think that's how I would summarize it. You want to ask something, something more, please feel free.
No, thank you so much, Himanshu. That's it from my side. I will get into it. Thank you.
Thanks, Apurva.
Thank you. Next question is from the line of Rohit from Samtava Investments. Please go ahead.
Good evening, sir. Thank you for the opportunity. So my first question was, so since the Dora plant has come about and, we were focusing a lot on increasing our market share in South India. I get it last 1-2 years has been weak overall for the market, but have you seen any progress in terms, can you share any progress that you have made in South India in terms of market share or in terms of retail touch points? I just wanted some clarity on that.
So definitely, Rohit, a very large percentage of this GDP growth that you see all India is driven by South India. We were almost totally a ceramic player in South India historically. Since the Dora plant has come in, we are doing much larger numbers of GVT in South and West, which were almost nil GVT kind of geographies for us. So it has definitely helped us. The unfortunate part for us has been that the downfall in ceramics has been steeper than what we anticipated. So while in this financial year you would have seen other results also, almost everybody has kind of dropped ASP. Let me tell you, we haven't. We have maintained our ASP because of our big boost on GVT volumes. Unfortunately for us, ceramics has dropped faster than what we anticipated, and which is why you see these flat top line results. If we had done better on ceramics, slightly better on ceramics, we would have been able to kind of put on the board a much better revenue figure.
So just on your point, if ceramics has fallen significantly, if I'm not wrong, the government orders were significantly skewed towards ceramic tile brand. So does that mean that our government sales has also reduced during the year?
It's multiple factors. This is also one of those factors. Consumer preference changing being another factor. But you are asking so on government specifically, so we have done a lot of work in the last 5-6 months. The whole government vertical for us has been rebuilt from scratch, and we expect to see good results coming out of this year. We also done a lot of work on, we have identified 805 departments, government departments, where we are going to focus for business. And there is a very systematic approach being followed to ensure that OBL brand is approved in these 800 odd departments. And there is an engagement happening in these 800 departments to get projects from there. So we expect to do well this year on this.
Got it. So just one last question. So what would be our overall capacity utilization for the year?
For our own manufacturing, I think it will be about 55%, if I remember right.
Okay. Okay, sir. Thank you so much and all the very best. Thank you.
Thank you.
Thank you. Next question is from the line of Moksh Ranka from Orient Capital. Please go ahead.
Hello. I would like to know the overall institutional sales contribution in FY'25 and Q4 if possible.
Moksh, your line is not very audible. Can you please repeat again?
Suresh, can you repeat?
Hello. Is it? Yeah. Hello. Is this better now?
Much better.
Okay. Yeah. I would like to know your institutional sales breakup. Like what was the total contribution FY'25 and Q4 FY'25?
The way we track our projects, Moksh, we do roughly around 20-25% institutional one way or another way. This is a combination of small or medium or large projects. All of that put together, private plus government.
Okay.
Is that clear? Yeah. Okay.
Yeah. And 3-5 years down the line, except for the boutique stores, what do you see a major sales contributor for us would be?
See, the market is getting more and more institutionalized. This is very clear. Will become more mature over the years. You look at any metro, no one wants to construct their own houses. So retail will obviously eventually give way to more and more institutional buying. Right? So projects have to be there. This is a necessity. There is no choice. But wherever we can sell on the retail front, because in retail, very clearly, brand positioning matters. Yeah, so retail is important, so is projects.
Okay, that was it from my side. Thank you.
Thank you. Next question is from the line of Shubham, an individual investor. Please go ahead.
Hi, am I audible?
Yes, sir.
Yeah, thank you. Just because the line is very distorted, I just missed the utilization levels for the whole company. If you can repeat that, and also for the FY'24, the same number for FY'24.
Shubham, I think what you need to know, we added more and more capacity in the last 1.5, 2.5 odd years. Yeah? So bulk of the capacity that we've added has come up in FY'23 and FY'24. Now, to answer your question, our capacity utilization last year was somewhere between 65-70. This year is somewhere between 55-60. Yeah? But on an expanded base. Right? So as and when the segments are a little better, you'll see capacity utilizations improving.
Yeah, got it. And also, if you can repeat the B2B sales, B2C sales, and B2E sales for FY'25 and 24.
See, both the years it's more or less similar, 20-25%, like I said, to a previous question. We do institutional, which is a combination of, like I said, the small, medium, large projects all put together, government, private, everything put together. Yeah? So that number is not moving so much. And we would want to keep it that way, knowing that projects are obviously becoming more and more relevant. Especially, in real estate, the way the cycles are. Someone mentioned that, tiling comes at the far end, which is a reality on projects. So today, with the sales which have happened over the last 2-3 years on projects, on real estate projects I meant, you should see a good pipeline emerging now anytime, right? As in when that demand comes in, that's what I think the industry is looking out for. And OBL has been very, very strong on projects, so I'm sure we will get a better upside coming into place soon.
Yeah, thank you for that. And just one last thing. So our 75 to 80% business comes from B2C, if I'm not wrong, based on the figures. So when do you see retail demand picking up? Like, do you see any signs of growth, recovery, or anything on that front?
Shubham, you are asking on the retail front now?
Yeah, retail front.
So not yet, Shubham. Nothing very dramatic. It's Q4 has been slow. Actually the whole of H2 also has been slow. So far nothing dramatically different has emerged.
Okay, and going forward, do you see the same situation going on, or do you see any expectation? Do you expect any signs of recovery on retail front?
So we expect H2 to be much better than H1. That's one if you ask me. And secondly, as I said before, Shubham, a lot depends on the export performance. Now, if exports, go up by 15-20%, say from next month, you will certainly see, lot of traction in the domestic market itself, because as soon as the capacity goes out, the pricing stabilizes, the dealers will stop postponing their purchases. Builders will kind of stop negotiating forever and start placing orders and all. So everything will just pivot. I think in the short run, we all know what the Indian economy looks like, what are the drivers, what are the risk factors. But I think for the tile industry specifically, if I would call out, there is the export performance, I would call out as one hugely important factor which will determine how fast the domestic tile industry turns around.
Yeah, got it. Thank you for that. And just one last question from my side. So we are at currently 55% capacity utilization based on the capex that we have done. So how confident are we in ramping up this to, let's say, 70 to 80%? And how many years do you think it will take for us to do that? Just that.
I think I already answered that, Shubham. So we are very confident. Otherwise, if we had not been, we would not have put such significant amounts for our balance sheet as I had said, I think 230 odd crores in the last 3-4 years, largely from internal accrual. India has one of the lowest tile consumption per capita, and has on one hand. On the other hand, India has one of the highest urbanization rate, urban center growth across the world. We expect to add, God knows, some large number of cities with a million plus population in the next 5-10 years. So the tile industry, the requirement for tile and everything is going to go up. So there is no two issues about it. There is no concern about that. It is just an issue of timing, which is difficult to predict that is it going to turn this quarter or H2 or how exactly. That is the bit of a joker in the pack.
Okay, yeah, got it. Yeah, thank you so much, and good luck for the future.
Thank you, Shubham.
Thank you. Next question is from the line of Ashwath from Arihant Capital. Please go ahead.
Thank you for the opportunity again. So my question is a bit on the industry scale. I wanted to understand is the demand, is it pent up in any form right now, or is it that this demand is being diverted towards Morbi-based competition on any end? Any color on the same.
So see interesting question, Ashwath. Ashwath, we also track the top 5-6 unlisted.
Ladies and gentlemen, the management line has been disconnected. Please stay connected till we connect the management back. Ladies and gentlemen, the management line has been connected again. Please go ahead.
Ashwath, so I was telling you that we also track the top 5-6 unlisted companies, and while they have grown faster than the listed companies, but it's not been dramatically different. And FY'25 results are obviously not out, but I think they will be, like in the past, the way the listed players have behaved and the unlisted players have behaved, I think it would be similar in FY'25 also. So your question of whether demand has been, whether organized sector has lost market share, I don't think that's true. There was earlier some talk of big builders and stuff like this. I don't think they have lost market share to unorganized sector. Ashok, are you there?
Yeah, I'm listening.
That's my answer. So I don't think organized sector is losing out on market share to Molby per se.
Got it. Quantifying of the market share, could you give us a number on what is our market share right now overall?
So, see, as I said about last year, the listed companies were about 11,500 crores. I think it will be something similar. So we would be about 5%, 5 to 6% of the listed company universe. If you were to add the top 5 or 6 unlisted players, then the market comes to about 16,000 crores. And then you can just do the numbers there. So we would be about 4 to 5% of that.
Got it. Are there any talks on ground of freight costs going up in the near future, or do we see it reducing back to, say, what it was a year ago, more than a year ago?
So I did mention that on prices that this month there were various meetings of Molby associations, and they all pledged that they are going to take up prices. They sent out WhatsApps and everything, but there was really no follow-up. Nothing has changed. The very fact that these meetings are happening, that people are talking about it in Molby, there's an indication that they are also hurting. They don't also have too many surpluses or extra margins to kind of dish out to traders. So let's see. I think I do hope that prices, at least the drop of prices, if it is stopped, that itself would be a very big positive for the industry.
Right. And sir, now since you're already by the end of May, what is the industry, right? What are our sales for these 2 months, and what do we see for Q1?
So Ashok, we don't give out any forward-looking estimates and all. We would not be comfortable with that.
All right, sir. Thank you. That's from my end. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, that was the last question of the day. I now hand the conference over to Mr. Aditya Gupta for closing comments.
Thanks everybody. Thank you for taking time out and being with us. Look forward to meeting you for the next earnings call, which will be in August sometime, or July end, I think. July end, yeah. Okay. Thank you everybody.
Thank you. On behalf of Orient Wealth Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.